In what could be the biggest pharma deal in India, Torrent Pharma, Dr. Reddy's laboratories, and private equity giant Blackstone are eyeing Cipla's 33.47% promoter stake. The transaction will trigger an open offer of an additional 26% stake, leading to a majority buyout of 59% equity in Cipla. At the bourses, Torrent Pharma has been languishing in the negative territory since it was reported to be a contender for Cipla's buyout. The latter, on the other hand, has shown an impressive rally of 15% since the reports of promoters looking to exit came out. The second competitor, Dr. Reddy's, has logged a nominal gain of 2% since September 5. Torrent's underperformance comes amid concerns of the debt that it would have to take to fund Cipla's buyout, which is over twice its size in revenue terms. But analysts still consider Torrent a better fit for Cipla's business than Dr. Reddy's, given its strong acquisition track record and limited portfolio overlap.
The primary concern is the deal is too big and Torrent doesn't have resources to finance the deal. So obviously they'll need to borrow to finance this. And we know if you borrow, the obvious consequences, the risk profile of the business worsens, and it will be very significant leverage that Torrent will have to take. If Torrent goes and buys it out, the investors would be more confident about Torrent kind of making more value out of Cipla versus Dr. Reddy's making more value out of the transaction. It's also the track record of Torrent that actually inspires investors' confidence.
Analysts note that Cipla's strong presence in respiratory and anti-infective segments is complementary to Torrent's absence in these acute therapies. Globally too, Cipla's strong US portfolio and leading position in South Africa with Torrent's Brazil presence will enable cross-market selling and faster scale-up. Dr. Reddy's, meanwhile, has a higher overlap with Cipla in both domestic and global markets. This may not lead to meaningful synergy, experts believe. While the three stocks will likely continue their current trajectory, analysts advise caution amid emerging regulatory risks.
The government trying to intervene in the way doctors prescribe drugs. They want doctors to prescribe generics and not brands. What's happening is branded prescription is getting shifted to trade generics, and trade generics will not generate as high ROI as branded prescription business generates for companies. So I think one of the large value drivers for acquiring Cipla is their branded prescription formulation business in India. So I think there are uncertainties on the longevity of the branded prescription formulation business, how long that will remain attractive.
While Torrent and Dr. Reddy's are able to pull off the deal via a combination of equity infusion and debt accretion, the transaction will dilute the earnings per share for both stocks. The debt accretion will also take the net debt to EBITDA ratio for Torrent and Dr. Reddy's to 3.5 times and 1.7 times respectively. Thus, investors should remain cautious and wait for more clarity on the deal to emerge, experts suggest. Today, on September 14, the Wall Street will react to the latest inflation data released in the US last night.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.